Evening members. This side Rahul Magan here as a Group Chief Executive Officer from Treasury Consulting and also a venture capitalist. As we speak, Treasury Consulting Group is a multinational headquartered group. We are based out India, Singapore and Hong Kong. More importantly, we do have offices in three parts of the globe. But before I explain more about our organization and about our products, I am very pleased to inform that we are starting we have started our own Treasury Management Academy, rather Treasury Management Group. In this, we would be setting up the benchmark for the Treasury function. Just like you have Institute of Chartered Accountant of India, you have Institute of Company Secretary of India, you have CFA, Certified Financial Analyst, you have CPA, American Institute of CPA, you have FRM, you have various associations pertaining to various degrees and various courses. Today, as we speak, Treasury Consulting launched on Treasury Management Academy. Now, in this Treasury Management Academy, we would be covering variety of topics pertaining to our treasury management system, interest rate benchmark, foreign exchange, currency, and many more things. Eventually, we would be taking this to the higher level and we would be integrating this with our OTT platform and our trainings, which is called Sheetal Academy. We need some time to make this happen, but as we speak, the Treasury Management Academy is live now, which is called TMA. Probably by end of Friday, we would be releasing or we would be finalizing an updated document on our fixed income platform, which is www.fixedincome.global, where we would be releasing that how much does it cost on a yearly basis. More importantly, what would be the content we would be covering, what would be the benefits, and what would be the future look like. And considering our strength in the treasury function, considering our understanding in the treasury function, you know that as we speak, we have more than 14,000 videos shot in the public domain, and more videos are coming. Considering our strength in the treasury function, we believe that probably in another 1 year, we would be in a situation to take this to the higher extent. And the cross channelization, which includes our OTT platform, TRFX Academy, our Sheetal Academy, and many more products, we would be able to integrate in a better way. But once again, in case you wish to have any information, you can WhatsApp on my personal number, which is +91 9899 242 978. Alternatively, you can WhatsApp at our back office, which is +91 9818 485 155. Treasury Consulting also have many more products, just like we have our FNO Learnings Academy, we have our news desk, we have our Sheetal Academy, we have our financial consultancy business, we have our private placement program, we have our pension fund, our family office business, and many more products. In case you wish to have any information, you can WhatsApp on the number which I shared with you. In this video, we would be talking about a very sensitive topic. Let me be very honest, very sensitive topic on which most of the people do not know what to cover. And this topic is nothing but benchmark regulation. I repeat, benchmark regulation. Thank you. Welcome to part 1 of the video. In this, we would be covering about very important concept which practically known as benchmark regulation. This is one of the most debatable topic we have in the world, and with the passage of time it would continue. Now, before I continue with the first part of the video, I would like to show you a book. Now, this is a book which is by the Bloomberg Press. You can clearly see that it is written here, the Bloomberg Press. And this book is readily available on Amazon. You can get it from Amazon. And you can see that how I study the book. I never study the book from an angle of plain reading. Rather, I study the book from an angle of the key concepts it is going to show you. You can see that these yellow stickers which I have pasted, and I'm not yet done in this book. I am done till page number 40, and I need to cover near about 200 pages, which means another 160 to 170 pages are pending. So this is the book, and these are the stickers which I have pasted. But I have to admit one thing very clearly, that just like Bloomberg TV, this book is also having many issues. The writer of this book, Mr. Liam Wegwan and Gavin Finch, having extremely poor understanding about the treasury function of a bank. And I, Rahul Magan, on a personal note, not from Treasury Consulting, rather a personal note, is giving a clear challenge to, the Bloomberg Press. Rather, I would say that there are two lines. I would say the praise words. Number one is the told with the verve and panache of a thriller, genuinely brilliant. The Telegraph, height of stupidity. There is nothing brilliant about this book. A great read by this book, The Times, another stupidity. Of course, it is an average read. Oh, these kind of books are also available on the Amazon. And I challenge Bloomberg that if they feel they are competent, let me talk and I handle the issue. But anyways, one important thing about the book is able to cover or able to justify the topic which they are talking. And the topic is nothing but the LIBOR. LIBOR is London Interbank Offer Rate. We are in February 2022, and the first phase of the LIBOR is more or less done. Well, practically speaking, theoretically speaking, many banks are done with the phase 1 except Indian banks. We'll have more videos in that regards. But practically speaking, I doubt banks are done with that. That's another important problem, which I doubt. Now, I would like to highlight a very important concept, and then I take you through few things from this book and let you know about very important concept. Number one, what the hell is benchmark regulation? First of all, we need to learn what is benchmark. The vernacular means the lexical, better word would be lexical. The lexical means the dictionary meaning of a benchmark means it's something we would like to compare. So example, when it comes to Australian cricket, we have multiple benchmarks. Ricky Ponting, Brett Lee, Clayton McGrath, Mitchell Starc, Stephen Smith, all have their own benchmarks. Like Ricky Ponting is a blend of captaincy, run scoring, his attitude, and how to handle the team. Exceptional. Stephen Smith is an example of how to score runs, how to stand in the tough conditions. Brett Lee, who got near about 750 wickets, international wickets. It's an example of how to cross the barrier. Even the last ball, he was near about 150, which is an exceptional. Glenn McGrath is an example of how, with relatively less speed as compared to Braitley, but you are still a successful and almost unreadable bowler. A benchmark is something we compare to, just like AB de Villiers. We compare AB de Villiers is a benchmark when it comes to unorthodox batting, when it comes to batting beyond convention, when it comes to, playing a cricketing shots which are not mentioned anywhere in any textbook. And that's not about IPL, it's about the test matches, one day internationals, probably in T20s and all. Similarly, we have benchmarks in financial markets. Now, what the hell is financial markets benchmark? There is a difference, and that we need to learn. Before I continue, the difference is AB de Villiers is a benchmark in the modern cricket. And if any youngster is able to meet that benchmark, it means he is on the right track, which means that the success, the name, the fame, the respect, the dignity, the value which AB de Villiers earned over the period of the time due to his unorthodox attitude, he who would be learning like AB, he would be getting the same. Probably the consistency, that's more important thing. But AB de Villiers can play any unorthodox shot because the cricketing textbook, I repeat, the cricketing textbook is not stopping AB de Villiers or any other youngster who is following AB de Villiers to play these kind of shots. There is no limit that you can't play reverse sweep, you cannot play reverse shot, you cannot play reverse pull. If you are able to execute it successfully, please go ahead. There is no harm in that. That's a more important point. If you are able to execute it successfully. But in the world of finance, situation is relatively opposite, just like black and white combination. In the world of finance, the benchmarks are governed by idiots. And these idiots are nothing but the regulators. Regulatory agencies are 20 years behind the current scenario. So if we are living in 2022, then the regulatory agencies are living in 2000. And many countries, regulatory agencies are living in 1980 also. So whether this is US CFTC, whether this is Federal Reserve, whether this is India, whether this is Singapore, Monetary Authority of Singapore, they all are living 20 years before, which means they all are living in 2000. But their ego is so high that they believe they are living in 2040. So there is a difference. The benchmark in cricket never stops any player to play any cricketing shot. Rather, it prays the new cricketers to come up with more innovative shots. On the contrary, the benchmarks in the financial industry, who are more or less governed by these idiots, they push the people to follow the idiocy. And the end result is the world faced the scandals like LIBOR scandal. Now, in this book, although I'm not done, I'm just at page number 40 and I know that how this LIBOR scandal unfolded. In this book, many bankers got prosecuted. They paid heavy fines, many banks paid heavy fines. But at the end of the day, one important question that prevails. Why did you came up with a regulation? I repeat, why did you came up with a regulation which could easily be manipulated? It means, you know what I mean. See you in page number second. But remember, majority of the regulations which are made by the so-called regulators, they are obsolete in nature. Like I said in this book, which is by the so-called Bloomberg press, the height of stupidity prevails. In the part second, we would be covering another important concept. Have a great time ahead. Welcome to the part second of the video. When we speak about benchmarks, we need to learn one important concept, that what is asset class. As we speak, like we are also a hedge fund, the world is having a standard asset class which is called FICC. I repeat, FICC. Now, FICC means fixed income, currency, and commodities. Like American hedge funds, we also take positions in FICC, which means fixed income, currency, and commodities. US banks, just like you have Goldman Sachs, JP Morgan, Citi, Morgan Stanley, Wells Fargo, and many, they all are valued on FICC. If their FICC is increasing, it means they performed well. If it is cutting down, they performed badly. Just like as we speak, Nomura and many other American banks. Nomura is not an American bank, but many big banks, they reported a drastic fall in the FICC. And street means the analyst, took this negatively. Now in FICC, like I said, we have fixed income, currencies, and commodities. We have benchmark everywhere. We have millions of benchmark in fixed income, millions of benchmark in fixed income. And it is impossible for me to cover all benchmarks in this video. Similarly, we have thousands of benchmarks in currency, especially in the non-deliverable segment, which is called fix. And more importantly, we have again thousands of benchmark in commodities. So we have many benchmarks. There is no doubt that we don't have benchmarks. Like I said, not 99.9%, rather 100%. 100% of the benchmarks are managed by the idiots, who are known as regulators. Since these benchmarks are managed by regulators, the level of manipulation is relatively very easy. But we need to wait. Before I come to the level of manipulation, I would like to read a line from this Bloomberg Press book, which is, in a close-knit world of derivative trading, a rare field ecosystem where mathematically gifted young men bet billions of dollars of their employers' money on movement in a complex securities few people understand, then came together in restaurants and clubs in the evenings to enjoy the spoils. That is stupidity. Now, first of all, I agree with the line that in a complex world of derivatives. But wait, there are thousands of derivatives which we have. And in majority of the derivatives, the manipulation is not possible. Let me take a concept called forward contract. GBP dollar forward contract, Euro dollar forward contract, Swiss franc to dollar forward contract, Singapore dollar forward contract, Australian dollar forward contract, New Zealand dollar forward contract, Japanese yen forward contract. The manipulation is not possible, or if possible, then it is at spot level, which is called spot fixing. You can fix the spot, and by the way, you cannot fix the spot always. You can fix the spot to an extent. To an extent. So for few seconds, you can fix the spot. Few seconds. The height of stupidity prevails when you refer when you're writing close knit world of derivative. So tomorrow if anyone asks me that if GBP dollar forward contract, can it be fixed? My answer is yes, it can also be fixed, but the probability of fixing this derivative contract, though it is a plain vanilla derivative contract, is relatively 0.001%. GBP dollar, who is also known as cable, spot fixing is possible. I completely agree, spot fixing is possible. But having said that, the spot fixing is only for few seconds. There is no bank in the world as we speak. I'm not quoting anybody's name, but no bank in the world who can fix GBP dollar. Because GBP dollar is traded right from the beginning of the market till the end of the market. Fixing is not possible. So one thing which we need to learn is that when it comes to the benchmark regulation, we have three levels of derivative contracts. Now, whether this is fixed income, whether this is currencies, or whether this is commodities. Number one is the L1, mark to market on a valuation basis. Number two is the L2, mark to model on a valuation basis. Number three is the L3, mark to matrix on a valuation basis. Henceforth, as we speak, derivatives across the globe, whether this is fixed income, whether this is currencies, whether this is commodities, you can take crypto also to an extent, or credit derivatives also. They all are categorized into three parts: L1, L2, L3. The highest level of manipulation starts from the end, which means it is easy to manipulate L3, followed by L2, followed by L1. Henceforth, it is a stupidity to say that all derivative contracts of the globe or a close-knit derivative trading, you know what I mean. That's a very important point. Now, coming to another important topic, which I have seen in this book. On a very often note, they mentioned interdealer broker, which is called IDB. Now, many people even not aware who the hell is interdealer broker. And let me try to give you an example of who the hell is interdealer broker. Guys, what happened? We feel that banks are interacting with each other, like in a OTC market. Or I will not explain OTC again. I have explained OTC many times in my many videos. But in a world of OTC market, assuming Goldman Sachs is interacting with JP Morgan. JP Morgan is interacting with Standard Chartered. Standard Chartered is interacting with UBS. UBS is interacting with Barclays. Barclays interacting with Deutsche. Deutsche interacted with Commerce Bank. So each bank interacts with each other on a fraction node. Now, on a fraction node mean less than a second as we speak. And with the advent of electronic communication network, which is called ECN, and soon we'll start videos in that direction as well, the speed is now nanosecond and much faster. Now, when a bank interacts with a bank, we feel that they are interacting directly. No, they are not interacting directly. Many a times there is a person which is called inter-dealer broker, like I said, IDB. And these inter-dealer brokers are often or not often. So often and not often are often and not often large financial institutions who actually facilitate the deal. Now, what they do, let me give you an example. They have a client who wish to sell $200 million GBP, say Microsoft. It's just a hypothetical example. And Microsoft Treasury head called the interdealer broker, I need 1.3614, the best quote, which I'm giving in the market. Interdealer broker contacts 5 banks: Goldman, JP, Citi, UBS, Morgan Stanley. And he's saying 1.3613. 1 bips is the commission which he is charging. Now that commission, how it is paid, that is outside the scope of this video. And by the way, this is outside the scope of this book also. Bloomberg even do not know how interdealer brokers are paid. And they simply mention interdealer brokers. They forget it to explain the whole architecture, how exactly it works. But it is Bloomberg. So this interdealer broker saying Goldman is in a position to give the best rate, 1.3612 as we speak. Though market moves in ticks. Ticks means less than a second. Now he would be calling the Microsoft treasurer and saying, guys, Goldman giving you the best quote. And it's not like the way we speak. It is less than a second on the phone, IMs, instant messengers, and emails and all these. And Microsoft hit the deal. So Microsoft sold 200 million GBP on a spot basis to the Goldman at 1.3613, though they were looking 1.3614, but 1 bips is the commission of that interdealer broker. The only thing I can explain here, Microsoft isn't sure, Goldman isn't sure whether this is market making or whether this is non-market making. That's very important point. But interdealer brokers are the backbone of the financial system. It's not about currencies. It's about fixed income, commodities, credit derivative, structured derivative. They are the backbones. And hardly any effort is being made in the last 20 to 25 years in the world of finance to make sure that their role can be mitigated. So when it comes to the benchmark and the possible manipulation of the benchmark, the inter-dealer brokers play a very important role. See you in the part 3 of the video. Thank you. Welcome to part 3 of the video. In this, we would be deliberating on a very important person who plays a significant role in the benchmark regulation, and the name of that person is none other than contributor. Now, who the hell are contributors? Contributors are those people, those who give their inputs in terms of benchmark valuation. Now, let me go to this book. This book practically talking about the fix. But do you know that in this book, till page number 40, in this book, till page number 40, the name of the original contributors or the list of the banks who were asked to contribute in the LIBOR is not given. I repeat, till page number 40, the name of the banks at that point of time, 2003, 2004 onwards, who were contributing on a daily basis in LIBOR computation is not there. So let me tell you another in a very simplistic way. You know, bench contributors are nothing but banks. Rather, I'm again incorrect. They are nothing but the big banks, because there is a difference between bank and big bank. So when we speak about a big bank, they are heavyweights. Heavyweights, or in my parlance, they are those who can easily influence anything. And history is a witness that Goldman, JP, Citi, Standard Chartered, UBS, Credit Suisse, Barclays, Morgan Stanley, Nomura, you name them, and they are into all forms of scandal. They have paid huge amount of money. So let me read something for you. Here it is. By summer of 2012, the LIBOR was the front news. In June, which means June 2012, Barclays became the first bank to reach a settlement with the authorities around the world, admitting the rigging of the rate and agreeing to pay near about $355 million. $355 million. Barclays bore the worst, but it wasn't alone. Swiss lender UBS, which is United Bank of Switzerland, settled with the authorities in December, which means December 2012, followed quickly by the taxpayer-owned RBS, Royal Bank of Scotland, Dutch Bank, basically the Rabo Bank, followed by the interdealer broker called ICAP and RP Martin. So the list is endless. We have one MDB scandal, we have various fines paid by JP Morgan. So I can't explain everyone. Now, since the contribution is made up by the big banks, the level of authorization, in my parlance, the level of authorization is very high. And this level of authorization is so high that if they tweak, I repeat, if they tweak their valuation by 1 bips, I repeat, 1 bips, which is the smallest tick we have in the world of finance, 1 bips, then the P&L of the various traders move by billions. Now, this is called a conflict of interest. I can't explain more about this because this is subject to consultancy, but now let me give you a very simplistic example of the life of the contributor. There are two persons. Say Shah Rukh Khan. Shah Rukh Khan doesn't mean the Bollywood Shah Rukh Khan. I just take a hypothetical name. Shah Rukh Khan and Rahul Magan. Shah Rukh Khan sitting at the beach, enjoying the beach. For him, sea is a great place. The waves are coming slowly, slowly. The wind is coming, there are girls, we can see the wine, the beer, the drinks, the childrens are playing cricket matches on the beach or whatever. A beach is a very happening place. But Rahul Magan belonged to Discovery Channel. He went inside the sea, deep diver swimmer, do the discovery, facing the shark, facing the ocean current in technical parlance, facing the depth of the sea, having huge equipments on his shoulders. Life is always at risk. God knows you will come at the surface or you might not come at the surface. To him, sea is the most dangerous place to be. Now, who is correct? Shah Rukh Khan, who is standing at the beach, sitting at the beach, enjoying, or Rahul Magan? Very difficult to differentiate because both are correct. Shah Rukh Khan is correct at his place, Rahul Magan is correct at his place. The reason, Shah Rukh Khan has nothing to do with the shark, he has nothing to do with the discovery, he has nothing to do with the ocean, he is enjoying at the beach. Similarly, a contributor never face, I repeat, never face plain market. Now by contributor I mean me, who is deep diving into the sea. A contributor always face the choppy markets because he is not contributing to one regulation. He is contributing to millions of regulations. And one bips here and there can swing the P&L of the various banks, his own bank, by millions of dollars. Cumulatively, one bips by him or her can swing the P&L by billions of dollars. That's a very important point. So he always faced the choppy market, and that's a very difficult thing for him. He facing the political pressure, the pressure from the peers, the pressure from the bank himself that you need to contribute this. But having said that, that's a more important point. Contributor needs to integrate with two setups. Number one is the treasury setup. Number two is the cash market setup. Now, when it comes to the treasury setup, every bank holds the treasury function. Like if we speak about Goldman, who is practically, I would say, dealing with almost all countries of the globe, except one or two which are where business is practically not possible. We cannot have a one person who handles the treasury function. Their treasury function is very big. After all, their asset base is huge. So a contributor who is contributing on behalf of Goldman Sachs, come on guys, he needs to handle with the multiple treasury functions. The US treasury function, the European treasury function, the Asian treasury function, Singapore treasury function, Southeast Asian treasury function, Latin America treasury function, and he need to take the consensus opinion and then give the valuation. But let's take a simplistic example. We say, oh my God, this is what the Goldman is as we speak. But is that easy? Isn't. It's not about Goldman. Many a times the bank own P&L depend upon that contribution, which is highlighted in this book. And being a treasury person, I completely understand that. And I would deliberate more into this. Henceforth, one important thing which I would like to highlight and which is completely missed in this book, Bloomberg, that the contributors should be independent. They cannot have a conflict of interest. Because if they hold a conflict of interest while contributing their rates, not a single benchmark regulation in the world can be cracked. And history is a witness that the world saw scandals in currencies, credit derivatives, almost every asset class. And the height of stupidity prevails when we are not sure, even in 2022, that the contributor belonged to the front office or middle office. We are not sure about that. As we speak, we are in 2022, February, second month. But still, there is no guidelines that contributor needs to be from middle office. And that's the best part of life. And this is completely missed in this book. So, when it comes to the benchmark regulation, we need to understand the role and life of the contributor, who plays a very important role in benchmarks. But unfortunately, he is an unsung hero. Now, in English, the unsung hero means he is a person who is politically, whose role, efforts, credentials are ignored as always. And not to mention, he is politically pressurized, he's pressurized from the peers, his own management, and sometimes the interbank desk. This is part 3 of the video. The last is the part 4 on the way. Bloomberg. Have a great time ahead. Welcome to part 4 of the video. In this, we would be deliberating on a part of the benchmark regulation which is called cash market. The height of stupidity in this book, Bloomberg, is that they haven't explained much about the cash market. But I tell you what is cash market. Every bank having its own balance sheet, big or small. Like if we speak about top banks, they have trillions of balance sheet. And this is not their old balance sheet. We need to learn that. So if today JP Morgan Chase having a substantial balance sheet, that doesn't mean the whole balance sheet is owned by them. That's a very important thing. On a daily basis, they interact with their counterparts, which is called interbank. And they take various positions or funding from the interbank to meet their requirements. It happens, and it's a part and parcel of life, but people have limited knowledge, so they do not know this about. And how would they know this about? They don't have interest also, let it be honest. Now, when we speak about benchmark regulation, cash market is not all about the money market. Now, the way in which it is depicted in this book, cash market is all about the balance sheet management. I cannot explain balance sheet management, though I am planning a course on the balance sheet management, but cash market is all about balance sheet management, which is widely bigger than the way it is explained here. So let me take an example of, say, JP Morgan. JP Morgan sitting on a huge balance sheet. And they have almost all peers as we speak as their interbank partners. Almost all peers as their interbank partners. So the role of the cash market is very big. Balance sheet is very big. Now, let me give you a simplistic example. The cash market takes positions to manage the balance sheet, which is called ALM and also known as immunization. Immunization is further divided into gross immunization and net immunization. They take up positions in almost all money market instruments. They take a position in commercial paper, they take a position in the certificate of deposits, they take a position in the treasury market of US, the UK treasury market, the secured funding, unsecured funding, the structured money market instrument, and many more. What I wanted to say here, cash markets are the real people who know what the hell is going inside the market. So let me give you a simplistic example. JP Morgan Chase New York cash market is taking $1 billion, which is nothing for them by the way, position in 10-year US security, UST. And assume they're getting 1.81 as a rate. Probably after a minute, a front office person needs where the hell is the 10-year UST going? He would be looking at its Bloomberg screen or maybe the Reuters screen that where the hell is the 10-year UST? He can see the curves, he can see the pricing, he can see who is contributing, who is not contributing, but who knew the actual reality of the market? Who interacts with the market? Who knew that $1 billion position, which a cash market which has just placed in US actually yielded 1.81%, and the next 1 billion which they are planning probably another few hours would be yielding 10 bips lesser? This is the sentiment. Who knew this better? A front office person or the cash market person? But like I said, cash market are those people who are unsung heroes. Now by unsung heroes I means majority of their work are discredited. Rather they are considered as those people whose role is just to manage the balance sheet, but actually they are the fighters. And when it comes to the benchmark regulation, first of all, before I speak about the benchmark regulation from the cash market, the role of the cash market in this book depicts the level of competence of Bloomberg. Cash market is depicted only in few lines. Had I not worked in a treasury function, I also not aware about the role of the cash markets. But here, the cash market is depicted only in few lines. Now, if I am a front office person or I am a person who is contributing, say I worked in Goldman and I'm asked to contribute, then if I am contributing somewhere, then I need to have the view from the cash market person rather than the front office person, because front office person is looking at Reuters, Bloomberg, but the cash market person is the person who actually create the rate which is coming on Bloomberg. So he is the most important person than the Bloomberg and Reuters himself. And what would if this cash market person is in connivance with you? I am the cash market person of any bank, and I am in connivance with the interdealer broker. to swing my pricing by 1 bips. 99% of the people even do not know that 1 bips here and there hardly matters, but it really matters to most of the people. Now the biggest question is, and the height of stupidity is, that even after 2008 financial crisis, even after Sarbanes and Oxley, even after so many committees being formed, even after so much fines is being imposed, and very recently many banks again fined, the regulators not yet highlighted the exact role of the cash market. So probably even now you have SOFR, Cora, Saron, Tora, and of course very soon we'll have videos on this also. The failure is sure and would continue because the backbone of the fixing, which is the cash market, is not yet regulated. Forget regulation, it has even not covered. I challenge you, you go to Google and type cash markets, treasury cash market, you hardly get I would say something which is worth reading. That is the stupidity, and Bloomberg depicted this in few lines. You know the problem in the system? Very simple. We only look at the tax, but we don't look at here. The end result is, even as we speak, Citibank, Credit Suisse, and many other banks fined. See you in the part 5 and the last. Have a great time. Welcome to the last and the closing section of this video. One thing which we need to understand very clearly, that the world of financial market is very big. Rather, the world of financial market is so big that sometimes it is difficult to assume who is doing who. That's more important point. But unfortunately, the people do not understand that. They have no knowledge to understand that. That's a more important point. If you wish to enter into the world of financial market, you need to learn that how exactly it works. An unfortunate part is that in majority of the cases, the working style of the financial market is not there even on the Google. So I'm not blaming the Google. Google is nothing but the search engine. It's a marketplace. So Google don't originate the data. It is the people who input the data. It's not a fault of Google. And that's a big problem. And very soon we have more videos. Like in 2021, I did promise to you that we would be bringing more videos to you. And this is one of them. And our reliance on the books like this is a sheer example of the fact that even the names like Bloomberg, you can see here how exactly it behaves. I agree that I have just read the 40 pages, the around 160, 170 pages are still pending. I agree, I'm not denying that. Who denied that? But the conceptual capability, the functional capability, even in this 40 pages, missed. And that's a bloody point, which I wanted to highlight. And probably In later stages also, we have these kind of interesting videos. Now, this is Rahul Magan from Treasury Consulting Group. You know my personal number, which is +91 9899242978. Alternatively, you know our back office number, which is +91 9818485155. To conclude, I just wanted to take another 2 minutes of yours, which is it hardly matters to me who thinks what about me. Let it be honest. Hardly matters because I really worried. Because I know one thing that regulation failed even in 1930, the Great Depression. The regulation failed even in 2000, the IT crash. Regulation failed in 2008, the great financial crash. Regulation failed in 2013, 14, 15, the sovereign crash of majority countries. Regulation failed in 2020, intercepting the corona impact on the global economy. And as we speak, we're standing on 62 trillion worth of sovereign debt, which, by the way, in himself prone to many kind of manipulations. Just take another 1 minute. We're left with two options. Option number one, we go the way we asked to go, which is follow the line. Number two, we go the way we love to go. Steve Jobs, Bill Gates, Warren Buffett, Larry Ellison, Mark Zuckerberg, many. Mr. or Mrs. Bloomberg, whatever you are. Liam Wagwan and Gavin Finch. I never met you. If you think you are capable, if you think you wrote a book, you know my number. I highlighted many times. A great read if you wanted to know how and why banks ended up paying billions of pounds for fiddling a number most people have never heard of. Then buy this book. Harry Wilson, City Editor, The Times. How much money Harry Wilson received to write this? Because even at 40th page, I fail to see any learning out of it. This is Rahul Magan from Treasury Consulting Group. Have a great time. Thank you. This is the video which is dedicated to the Treasury Consulting Group. And to be very honest, we are keeping this video now onwards at the end of every YouTube video. And all the courses by Sheetal Academy and Treasury Consulting Group. There are many questions people generally raised about Treasury Consulting, the products, the services, and we reply these questions on WhatsApp, LinkedIn, Twitter, YouTube, and variety of forums. But the quantity of questions, the queries are continuously increasing. Henceforth, we decided to make a video. Of course, this is not the only video which we are making. Rather, over the period of the time, we would continue to upgrade this video, to be precise. First of all, Treasury Consulting Group is a multinational headquartered group. We are based out India, Singapore, and Hong Kong. As we speak, company is around 5 years plus old, and more importantly, we are 100% cash rich company. Unlike the so-called unicorns, without quoting the name, and even if I quote the name, it's a fact that they never touch the profit. The company is in profits from inception. So since inception, the company is in profit. So we are a 100% cash rich group, 0% venture capitalist, and 0% debt. More importantly, our legal entities invest our free cash with mutual funds and international banks across the globe. We are a client to almost top 10 mutual funds in India. And that is the reason we do have holistic information about the mutual fund industry in India. That's a separate thing, that majority of the information never comes in public domain. Even if a fraction of the information comes in public domain, this fraction of information come for one day and then you know how it happens. So as we speak, we do have three legal entities: India, Singapore, and Hong Kong. More importantly, we are a cash rich group and we are having 0%, which means not a single cent invested by any venture capitalist or private equity firm. The company has not taken debt from any bank, financial institution, or hedge fund. So we are a zero debt company. That is something which we need to understand very holistically. The following are the products and services we do have about treasury consulting. The more detail is coming at the as the video progress. We have our own proprietary hedge fund. Many people in the world do not understand the meaning of proprietary. The proprietary means no party outside treasury consulting can invest in our hedge fund, which means that we trade with our own money. We are not accepting anybody's money. Even if you give us any amount of money, any proposal on the table, it is completely rejectable. So proprietary is a word which is often used in United States and Europe, but unfortunately this is least used in India. The proprietary means people trade their own money. They do not trade somebody's money. Even if tomorrow, after listening this video, you come to us and say that I give you $1 million to trade my money, I will say thank you very much. We are literally not interested. We hold our own proprietary fund, and that fund would continue to be proprietary, which means that the outside participation would continue to be zero forever. This fund includes the equities desk, the commodities desk. We have our virtual comics platform. More importantly, we have our OTT Academy. OTT stands at over the top, just like we are having Amazon Prime, we are having Netflix, Disney. There are so many, OTT platform we have worldwide. Our OTT platforms is not as big because they started 6 months ago, but thankfully we are having handful of customers and they are growing. In our OTT platform, we are creating video and uploading at the back end of our platform. People with authorized login ID and password can see these videos. Apart from that, no one else is authorized to see these videos. As the video progresses, you will get to know that as we are having around 13 plus, which is 13 plus different series as far as the OTT platform is concerned. As we speak, August 2021, it is 13 plus and we are continuously adding more series. Our idea is very clear. We will reach to 35 or probably 40 series in another 1.5 years of time. We are having our learning arm, which is Sheetal Academy. The details of the Sheetal Academy is given at the end of the video. We have our own family office desk. Rather, very soon, our hedge fund would be a part of our family office. We have our own pension fund desk in terms of consulting. And there are 62 plus different platforms which are listed on our fixed income platform, which is www.fixedincome.global. So as we speak, we have our proprietary hedge fund, we have our equities desk, we have our commodities desk, we have our virtual comics platform, our OTT Academy, our penny stock desk, Sheetal Academy, family office, pension fund, and variety of such platforms. TNFX Academy, which is our OTT platform, over the top platform. This platform is having 13 plus series. Now, few I mentioned, basic series, moderate series, advanced series, valuation series, treasury series, wealth management platform. Wealth management platform is actually integrated with TRFX Academy and would continue to be integrated because of course we would be investing heavily in the wealth management platform. When we speak about wealth management platform, we speak about the learnings. We are not talking about the trading. There is a difference. It's a training platform. Remember this. We have 13 plus different series, like few are basic series, moderate series, valuation series, advanced series, treasury series, research and analysis series, and we have variety of such series. So please do remember that. As we speak, we have around 180 plus videos live. Every week we shot 10 videos. So every month we are adding around 40 to 50 videos. And we keep adding more and more videos as the time would come. The target is very clear that we would be having more than 2000 plus videos probably in another 2 years of time, which means a dedicated private platform for learnings. So what is the wealth management platform? A wealth management platform is designed to cover all asset classes of the globe. The asset classes includes the fixed income, currencies, commodities, credit derivatives, structured derivatives, and many more. So I repeat, a wealth management platform is designed to cover all asset classes of the globe. Wealth management platform is also designed to cover continent-wise topic. Continents are United States, Europe, AXI, Asia excluding India. We have excluded India because the financial markets in India are very, very shallow. Very shallow. Like if you speak MTN, medium term notes, if you speak about any exotic derivatives, nowhere people are taking this. In fact, you know that I worked as a corporate treasurer. Even today, 99% of the treasury function in India are working as a cost center. Hardly 1% are working as a profit center. Hardly 1%, to be honest. So the continent wise include United States, Asia excluding India, Asia excluding Japan, India and Japan, global financial centers like Singapore, Dubai, Hong Kong, Luxembourg, Switzerland, and respective, and of course Latin America. We are creating a wealth management platform which would be covering everything. Example, CDS, credit derivatives. India is not a market of credit derivatives. Reserve Bank of India on paper allowing credit derivatives, but neither we have buyer nor we have sellers of credit derivative. So on paper you have credit derivative, but practically you don't have the credit derivative in place. Henceforth, we really need to understand that if we wanted to talk about credit derivative, the only markets are US, Europe, or Singapore. India was not a market, is not a market, and would continue to be because we are doing nothing substantial to create a credit derivative market in India. That's the reason, even after a lot of frauds which are happening, banks are just writing off the money from their books. Simply writing off the money from their books. Had it been the credit derivative, banks would be able to get their money back. But once again, if you talk about this issue, people don't understand because they are not interested to have this. Anyways, a wealth management platform designed to cover all asset classes of the globe. And very soon, this wealth management platform would link with our fixed income platform, which is www.fixedincome.global. And of course, we would be adding crypto as well. That is most important. We are planning around 1000 plus wealth management videos by December 2022. which would be covering continents like United States, Europe, Japanese market, Asian markets, global financial centers, Latin America, the tax havens like Bermuda, BVI, Caribbean and respective, and structured finance, my favorite. 1000 plus videos would be covering almost everything as far as the wealth management is concerned. We would be covering a very simplistic and the plain vanilla topic. At the same time, we would be covering the exotic topic also. So basically, our wealth management platform is for the people those who are having zero knowledge, and it is also for the people those who are having advanced knowledge. Please understand that. It is not designed for the people those who only have basic knowledge or the people who wanted to have exotic knowledge. People with the basic, moderate, or advanced, they all can participate. This is our TRFX Academy, a screenshot from taken from our fixed income platform. This TRFX Academy is our OTT platform, which is over the top platform. And in this TRFX Academy, we are of course interlinking the wealth management platform also. I promise you, probably in another 1 to 2 years of time, we would be adding a lot of content in our wealth management platform and of course our TRFX Academy. Only people with the login ID and the password can enter into this platform, and of course on a weekly basis we are trying to have at least around 10 plus videos, so that we would be able to reach to the target as far as the December 2022 is concerned, and we are committed to it, sir, to be honest. Treasury Consulting Group having own learnings platform, which is known as Sheetal Academy. As we speak, Sheetal Academy is covering around 13 plus schools. Few are mentioned here. The World of Options, Option Worlds, School of Nifty and Bank Nifty, School of Investment Banking, School of Venture Capitalist and Private Equity, School of Commodities, School of Accounting, School of Foreign Exchange, School of Treasury and Risk Management, School of Forensics, and more schools are coming. Before I change the slide, the purpose of Sheetal Academy is to create a learning platform which link with Thomson Reuters and Bloomberg. We know that we have many learning academies worldwide, and I challenge all learning academy, how many of them are actually linked with Reuters and Bloomberg. I often share Reuters and Bloomberg screenshots on YouTube, on LinkedIn, on WhatsApp, on Facebook, on Twitter. Hardly I see, in fact, limited people in the world are sharing the Reuters and the Bloomberg platform screenshots, because the question is it requires a very deep and dense knowledge. Once you are sharing the screenshots, people generally ask questions from you, and you should have a knowledge to reply. That is more important thing. Very soon we have more schools coming. So as we speak, we are having Option World, Nifty, Bank Nifty, School of Investment Banking, School of Venture Capitalist and Private Equity, School of Commodities, School of Accounting, School of Foreign Exchange, School of Treasury and Risk Management, School of Forensics. The other schools are School of Trade Finance, School of Regulatory, School of Treasury Technologies, Functional Training. We have functional trainings, forensic trainings, information technology trainings, regulatory trainings, and technological trainings. As we speak, around 200 plus trainings are listed. More trainings are coming over the period of the time. All these trainings and everything are integrated with our fixed income platform. You visit our fixed income platform and you would be able to get all trainings and all information here. Apart from that, we provided you the WhatsApp number. You just WhatsApp if you have any query, and in most of the cases we reply if we feel that the query is genuine. So the Sheetal Academy is a platform whose job is to provide practical and industry oriented knowledge. Of course, we link with Thomson Reuters, Bloomberg TV, and many international magazines, international books, and so on and so forth to provide you as practical training. You visit our YouTube channel, In fact, the video you just listened, you can compare this video with any other YouTube channel and rest you know. Apart from that, we just launched our TCG Video World. What is that? We have people, those who working day night in their respective jobs. Some are engineers, some are finance people and all. They don't have time to attend the regular one-to-one trainings. I agree that they need video trainings, like the content shot in the video delivered to them, and as and when they get time, they listen to it. We launched our TCG Video World, Treasury Consulting Group Video World. In this video world, we have decided to have 100 plus topics, 5 already done as we speak. As we speak, 5 video trainings are live, pay and get. The only time need is the time to upload on Telegram groups. Every training at least 1 hour or 2 hours. It is a video training, so it is not a one-to-one training. Videos are recorded, you get the videos, recorded videos. Videos to be upload in the Telegram groups, because Telegram gives you the privilege to upload 2 GB of video. Whenever we feel that the video length is big, we request people to share their Gmail IDs. They can create their fresh Gmail ID and we upload the video in their Gmail ID. Which so that because Telegram as we speak is giving a privilege of only 10 GB, 2 GB. This TCG Video Worlds covering advanced trainings, moderate trainings, and basic trainings. So basic trainings, advanced trainings, moderate trainings. Please note my next word carefully. All basic trainings would be 2000, which means you choose any topic of basic, you get at 2000. Moderate and advanced training pricing depend upon content to content. So I repeat, TCG Video World is a platform when you have 100 plus topic, 5 already live, 2 hours video training. It's a video training to be uploaded in the Telegram group. If we need more space, we request for Gmail ID. Advanced trainings, moderate trainings, and basic trainings. Please do remember this. And this is live. This platform is well integrated with our fixed income platform, www.fixedincome.global. So this is well integrated with our fixed income platform. This is a glimpse of our hedge fund desk. Like I made myself very clear upfrontly that no third party in the whole world can enter in this platform, which means that we do not trade somebody's money. We only trade our own money. So no third party can enter in our platform. This is only for ours. But this platform covers equity desk. This platform covers scalping group. This platform covers commodities desk, comics platform, penny stock desk, silver scalping fund which we just started, and more importantly the Asian desk where we're covering Singapore and all, and the digital gold. More product we would be launching in this hedge fund, but I will again repeat, no third party except Treasury Consulting can enter in this fund. This is not for outsiders. This is our prop hedge fund, which is completely designed for the organization, by the organization. No third party is allowed. And we are very limited companies in the world, those who are running the profitable hedge fund. Our income and everything is really good, but we do not trade somebody's money. These are our credentials. You know my handheld number 9899242978. These are our WhatsApp numbers, our platform www.fixedincome.global, email ID rahul.magan@treasuryconsulting.in or info@treasuryconsulting.in. I assure you, probably in another 1 year of time, we would have more than 100 plus different platforms across the globe. Company would continue to be cash rich. We never allow any venture capitalist to enter in our company because we know the side effects of that, and we continue to add lots of products and services. In case you wish to have any information, these are all the credentials. Thank you guys and have a great time ahead.